Did you know that some of the latest car models have already experienced a significant 42% drop in prices this year? This revelation comes from a recent report by Forbes. The current situation in the automotive market is reminiscent of a classic narrative where an asset class sees a rapid price increase, resulting in a massive bubble. Even though work stoppages have disrupted production at some car plants, there is an oversupply of vehicles and demand has dwindled. Consequently, prices are being slashed more rapidly than at any time in the past decade. New cars, used cars, and electric vehicles are all facing a reckoning, signaling that the long-feared car market crash is beginning to gain momentum. The unprecedented challenges brought about by the pandemic, such as factory shutdowns and chip shortages, are mostly behind us. Car production has rebounded, and there is now an abundance of new cars in stock, with popular models having more than 90 days of supply at dealerships. Used car prices have fallen by 6.6% in the previous month and have lost over 20% of their value since mid-2022. With fewer disruptions in manufacturing and vehicle delivery anticipated in 2023, the conditions that supported record car price growth in recent years are no longer in place. Concerns over UAW strikes that temporarily closed some plants for Ford, General Motors, and Stellantis are subsiding. A prolonged strike could temporarily fuel the new car bubble, but it would likely lead to a more significant price crash when production resumes. After a turbulent few years in the automobile market, we are now witnessing a stabilization in new vehicle pricing trends. Dealers and automakers are feeling pressure on prices. With high auto loan rates and growing inventory levels, it appears that new vehicle prices have reached a plateau. This suggests that balance is finally being restored. According to the latest data shared by Yahoo Finance, the slowdown in the new and used car market is rapidly intensifying. For the first time in nearly 3 years, inflation has outpaced new car prices, rising by 0.6% to 3.7%. You may recall when the average new car price exceeded $50,000 back in January. Back then, experts anticipated further price increases due to high demand, but the landscape has significantly changed. With the average car payment at record highs, potential buyers are either delaying or foregoing the purchase of a new vehicle. A study by Cox Automotive found that the average American now needs a staggering 42 weeks of income to afford a new car, a significant increase from the pre-pandemic figure of around 33 weeks. Given this worsening affordability, it's no surprise that demand for new vehicles is waning. As of August 31st, the average transaction price of a new vehicle had dropped by almost $2,000 to $48,165, according to Kelley Blue Book. This marks the largest decrease in the past decade, and experts believe it's just the beginning. The demand is not keeping pace with production, which is a stark contrast to a year ago. Domestic car inventories are now nearly 30% higher than they were just a few years ago, when lots had only 60 days of supply available. Ford, GM, and Stellantis, known as the Big Three automakers, are likely to report a tighter supply compared to the rest of the market, but demand for their products is not as robust as it used to be. In fact, data from Cox shows that in August, 3 vehicle segments, namely compact cars, subcompact cars, and subcompact SUVs, all experienced month-over-month and year-over-year price declines. Meanwhile, the average price of luxury vehicles fell to $64,107, a decrease of over 4% since the beginning of the year. These figures, while they might appear modest, are quite remarkable, especially considering that some experts were anticipating a 5% increase in the second half of the year. They indicate that new car prices are no longer on an upward trajectory but are beginning to decline. The only factor currently preventing a full-blown crash is interest rates, as they will influence the pace at which vehicle prices drop in the coming months. This is in contrast to the minor 10% correction predicted by Wall Street banks like J.P. Morgan and Goldman Sachs earlier this year. In fact, some new vehicles have already depreciated by nearly 50% of their value. To fully grasp the severity of this crisis, let's examine the concerning state of the US electric vehicle (EV) market. A recent analysis by Cargurus, as reported by Forbes, reveals that EV prices are plummeting in 2023. For instance, the Tesla Model S has experienced a sharp 42.1% price decline, dropping from $73,751 to just $42,669. Similarly, the Kia EV6 saw a 32.7% price drop from $63,939 to $43,035, and the Ford Mustang Mach-E faced a 32.1% price decrease from $65,176 to $44,250. These are just a few examples of new car models that have witnessed price reductions of over 30% in the past 10 months. 2023 has been particularly challenging for electric cars, with their prices falling significantly. Battery electric vehicles are struggling to retain their value after the initial frenzy that turned EVs into prized commodities. Cox reported that the average transaction price for a new electric vehicle has already fallen by 20%, declining from $66,390 to $53,438. It's worth noting that just a year ago, demand for these vehicles was so high that prices reached a peak of almost $75,000. Now, electric vehicles are staying on dealership lots longer than ever before. The average EV price has come closer to the industry average as inventory and availability have increased. The turmoil in the US auto industry began in the first quarter when Tesla significantly reduced its prices by $13,000 in an effort to boost car sales. Other automakers faced similar challenges and followed suit, leading to a wave of EV price cuts. At one point in the second quarter, Volkswagen acknowledged that EV sales had dropped to zero. Executives attributed this to consumers' reluctance to buy electric cars, even with substantial discounts on used EVs. Over the last 12 months, second-hand electric vehicle values have plummeted due to an oversupply of used models flooding the market. Now, we're not only seeing used vehicle prices decline, but also substantial depreciations in used vehicle prices. As Kevin Roberts, the Director of Insights and Analytics for CarGurus, pointed out, price reductions by companies like Tesla and Ford on their new models are further driving down the prices of used electric vehicles. Just like any bubble fueled by speculation, when demand hits a roadblock, cracks begin to appear. The EV bubble has burst earlier than expected, primarily because electric vehicles are considered cars of the future, not the present. They are often impractical, particularly for long-range driving, and many drivers who purchased EVs in the past few years have come to this realization. This is why they are eager to sell their cars, even at a significant loss. Despite the administration's aggressive push to increase EV sales and transition the country to clean energy, many Americans remain unconvinced about the benefits of owning an EV. A new poll by the Energy Policy Institute at the University of Chicago found that nearly half of Americans, 47%, believe it's unlikely they will purchase an electric vehicle as their next car, citing the lack of charging infrastructure and high costs as the main barriers to adoption. Charging infrastructure for electric vehicles remains unreliable. Despite the federal government's $7.5 billion investment in EV charging, as outlined in President Biden's bipartisan infrastructure deal, it's still a challenge to find available and functioning charging stations in the United States. Of the 56,256 charging stations identified by the Alternative Fuels Data Center, over 4,000 were temporarily unavailable due to maintenance. Moreover, these stations are not evenly distributed, with the majority concentrated in California, which has 15,706, followed by New York, Florida, and Texas. In contrast, Alaska has just 58 charging stations. The decline in the EV market follows a rush by buyers to purchase these new vehicles without fully understanding the long-term implications. Similar to the scenario for traditional gasoline combustion models, demand outpaced supply, depleting inventories and creating a fear of missing out. However, now that EV owners are experiencing disappointment, potential US car buyers are finding themselves priced out. These once highly sought-after commodities are losing their appeal. In the upcoming months, you should expect to see more inventory at dealerships and deeper price cuts. As a consumer, it's essential to stay informed with the latest news to make well-informed decisions when buying a new car. We are currently in the calm before the storm, and the conditions are aligning to trigger what could be the most significant car market crash of our lifetime. It's crucial not to miss the opportunity when it finally unfolds. Thank you for watching.